Good morning. Thank you for joining today's daily webinar. Today's topic is going to be Mega Backdoor Roth Solo 401k, retirement savings weapon for doctors, anesthesiologists, and lawyers. We will also go over your live questions here on the air today. As always, please like this video and subscribe to it, as it helps to get the word out to other solopreneurs like yourself. Also, today's presentation is for educational purposes. Okay, let's get started. So, the Mega Backdoor Roth Solo 401k plan has been around for quite a while. I know that our clients really started using it back in 2014, and it's really grown exponentially since then, especially with a lot of doctors, lawyers, and anesthesiologists, because they tend to be high income earners. So not only are we going to talk about how the voluntary after-tax solo 401k as part of the Mega Backdoor Roth works, but we're also going to talk about a couple topics. For example, how you can fully contribute to your daytime employer plan. Let's say you also work for a hospital and you're a W-2 employer of that hospital, and you participate in their 401k and you maximize contributions to that plan. If you're also self-employed on the side, you're going to be able to maximize the voluntary after-tax solo 401k contribution all the way up to the overall limit. So talk about really supercharging your retirement account savings, because in some cases you end up doubling up on the overall contribution limit. We're also going to talk about how you can also contribute to a defined benefit plan as well as a solo 401k plan. And again, these professionals such as doctors, anesthesiologists, and lawyers are the ones that we commonly see participate in both a defined benefit plan, where they max out the employer contributions to that defined benefit plan, and then they turn around and also do a mega backdoor, where they'll maximize voluntary after-tax solo 401k contributions. So we're also going to go over some questions, as I mentioned earlier. It looks like we have a question already here. Let's take a look at that, and then we'll circle back to today's topic, which again is the Mega Backdoor Roth Solo 401k, specifically how it's the retirement savings weapon for doctors, anesthesiologists, and lawyers. So here's a question here from Terry. I want to confirm I can still set up a new solo 401k in Georgia, since we have until May 1 to file based on weather events. So yes, not only can you still set up a solo 401k plan for 2024, since you are in a disaster relief area, but even if you were not in a disaster relief area, you could still open a solo 401k plan here in 2025 and make 2024 contributions. Specifically, if you filed for a business tax return extension, you would be able to make both voluntary after-tax solo 401k contributions and employer Roth or pre-tax contributions, just not employee contributions. But in your case, if you are in a disaster relief area due to bad weather, for instance, then you would be able to open a solo 401k plan here in 2025 and make all contribution types for 2024 by your business tax return due date plus timely file extension. All right, looks like I have another question here. I have submitted 2 after-tax to Roth Solo 401k in-plan conversion forms. How soon can I get the 1099-R report? Well, you won't get that 1099-R till January, February of 2026 if you process the conversion here in 2025. keep in mind that the conversion rules are different than the contribution rules. What does that mean? That means that you have until your business tax return due date plus timely filed extension to make 2024 contributions here in 2025. However, if you make that contribution here in 2025 and you then convert it to the Roth solo 401k or the Roth IRA, even though it's going to count as a contribution for 2024, it's going to count as a conversion for 2025. Therefore, the Form 1099-R won't be issued till January, February of next year, so 2026. All right, let's get back here to today's hot topic, which is Mega Backdoor Roth Solo 401k, the retirement savings weapon for doctors, anesthesiologists, and lawyers. And keep shooting over your questions, and we'll come back and handle some of those questions that we proceed here. So before we can really start talking about how the voluntary after-tax solo 401k as part of the Mega Backdoor Roth Solo 401k is a popular strategy for these type of professionals, first we need to understand what the heck it is. So the Mega Backdoor Roth Solo 401k is where you first have to open up a solo 401k plan with a provider, such as my solo 401k financial, whose plan documents allow for voluntary after-tax solo 401k contributions, and second, for conversions of those voluntary after-tax solo 401k funds, which can be converted either to the Roth IRA or the Roth Solo 401k plan. So once you choose the plan document provider that you want to open that plan with, then the next step is to open the Solo 401k plan. So once you open that plan, then you're going to have separate holding accounts, aka participant accounts, under that Solo 401k plan. So it's still considered one plan, just you need to have separate holding accounts under that plan to hold each participant's funds. So let's say that we've got Sally, who's self-employed. She's an anesthesiologist. Let's say that Sally wants to do the Mega Backdoor Roth Solo 401k plan. Well, she would open a self-directed Solo 401k plan with a provider whose plan documents allows for those features I just mentioned as part of the Mega Backdoor. Then, if she uses my Solo 401k financial, for instance, we would help her open up the holding accounts under that Solo 401k plan, which can be opened over at Fidelity or Schwab. Even though both of those institutions offer their own Solo 401k plan, it does not allow for the Mega Backdoor. So they would open the plan with us, but they can still use Fidelity or Schwab to hold the funds. Yes, that's true. Fidelity and Schwab will provide holding accounts, aka brokerage accounts, for a Solo 401k plan offered by a company like my Solo 401k Financial. And we would assist in opening up those brokerage accounts. For instance, let's say Sally decides that she wants to have 3 separate brokerage accounts under that Solo 401k plan. So she would have a total of just one plan, but 3 separate brokerage accounts. One would be labeled pre-tax. The second one would be labeled Roth Solo 401k. And the third one would be labeled voluntary after-tax Solo 401k. So once those 3 brokerage accounts have been opened, then it's time to make the contribution to that voluntary after-tax Solo 401k bucket, that brokerage account. Once that contribution has been made to that voluntary after-tax Solo 401k bucket, then it's time to convert those funds from the voluntary after-tax Solo 401k bucket to the Roth Solo 401k bucket, and that can be done over the phone. You would call Fidelity and you would ask them to move the funds from the voluntary after-tax Solo 401k bucket over to the Roth Solo 401k bucket. So that would complete the movement of those funds, and then it's time to perform the reporting of that conversion to the government, and that's where we would issue the Form 1099-R if you're a client of my solo 401k financial, and you timely request that issuance of that Form 1099-R. So you need to make sure you notify us if you want us to issue that 1099-R, and make sure you do so on a timely basis. And you also want to make sure that if you're trying to process that conversion in a particular year, that you do it by the end of that year, so that the Form 5500 Easy is then provided by January, February the following year. So that's where step 5 comes into play, is where we would issue the Form 1099-R with the copy filed electronically with the government and a copy sent to you for filing it with your personal Form 1040 tax return. So that's how the logistics work with respect to the mega backdoor. Looks like we've got another question here from Brooke. My accountant needs my solo 401k address and EIN number. What's the best way to get those? Well, number one, your accountant should not need our address or our EIN number, because if you're filing your taxes and he's trying to do some type of deduction for the fees that you paid to us to open the plan, and if you paid by credit card, then you would not need to file a I think it's called a W-9, because you pay by credit card. There's an exception to that. So you don't need our EIN number for my solo 401k financial. If you need our address, you can certainly get that from our contact page. So you will go to our website and click on contact us in the top right hand corner. Okay, let's see here. And keep in mind that the EIN number for the solo 401k plan is used on that Form 1099-R for reporting that conversion. It's not the EIN number of our company, it's the EIN number for the solo 401k plan. All right, so again, we're talking today about the Mega Backdoor Roth Solo 401k, specifically how it's the retirement savings weapon for doctors, anesthesiologists, and lawyers. So we just went over how it works, the steps to actually process the conversion. Now let's talk about how you can actually max out your daytime employer 401k and still be able to max out your Mega Backdoor Roth Solo 401k strategy. So let's use an example for that. Let's say that James is a doctor and he contributes to his daytime employer 401k plan. Not a 403b, but a 401k plan. If he contributes to a daytime employer 401k, let's say James further maximizes his annual contribution to that daytime employer 401k. And let's further assume that we're going over 2024 contribution limits, because again, you still have time to both open a solo 401k plan here in 2025 and make voluntary after-tax solo 401k contributions for tax year 2024. You can do that by your business tax return due date plus timely file extension. So let's further assume that James decides to open a solo 401k plan here in 2025. And the sole purpose of opening that solo 401k from a contribution perspective is because James wants to maximize his Mega Backdoor Roth Solo 401k. Let's further assume that James' self-employed business on the side, in addition to his daytime employer 401k, let's say his self-employed business is an S corporation. Well, James still has time to open a solo 401k plan here in 2025 by his S corporation business tax return due date plus timely file extension. So he has until September 15 to both open his solo 401k plan and make that voluntary after-tax solo 401k contribution. Let's further assume that James reports $69,000 of gross wages on his W-2. Well, James can choose to contribute that entire $69,000 contribution amount to the voluntary after-tax solo 401k bucket and then immediately convert it to the Roth solo 401k or to a Roth IRA resulting in James having fully contributed the full $69,000 to his daytime employer 401k and an additional $69,000 to his S corporation self-employed sponsored solo 401k plan. So that's why it's considered such a weapon for high income earners like anesthesiologists, doctors, and lawyers, is because you can really double up on those contributions by contributing to multiple 401k plans, specifically your daytime employer 401k and then your self-employed solo 401k plan. Let's talk about a second scenario. Let's say that now, using the James scenario again, and let me share my screen for that scenario. Give me a moment here. Let's see here. And I'll get to that page. Let me pull up that particular page, share my screen here. And we're going to talk about a scenario where you can contribute to both a defined benefit plan and a solo 401k plan. Let's see here. Let's do a search here on our website to get to that page. So here's a good one here. Contribute to both a defined benefit plan and a self-directed solo 401k plan. Let's go over that one first. So many high income earners who are self-employed will open up a defined benefit plan, also known as a cash balance plan. And the defined benefit plan solely allows for employer contributions. Those high income earners will also open up a solo 401k plan for that same self-employed business, resulting in participating in two separate plans. That is the defined benefit plan and a solo 401k plan. So using the James example, let's say that he's self-employed in an S corporation. James, if he's a high income earner, if he reports a high amount of W-2 wages, let's say in the hundreds of $1,000s figure, then James, with his advice from his financial advisor or tax professional, may decide that he wants to also open up a defined benefit plan for the sole purpose of reducing his taxable income for the year. Because when you make a contribution to a defined benefit plan, it's going to be on a pre-tax basis. So that's going to reduce your W-2 wage income from your self-employed S corp for the year. So you would make a contribution to the defined benefit plan. Again, it's solely on the employer side. It doesn't allow for employee contributions. But then James would also open up a solo 401k plan. And when he opens a solo 401k plan, he can maximize his mega backdoor Roth strategy, where he can make the full voluntary after-tax solo 401k contribution, known as the 415 overall limit, which again, we're talking about 2024, which is $69,000. So on top of contributing to a defined benefit plan and the hundreds of thousands of dollars figure, he could also turn around and make a voluntary after-tax solo 401k contribution of $69,000 and immediately convert it to the Roth solo 401k or the Roth IRA. So that's another strategy for those types of professionals like doctors, anesthesiologists, and lawyers who are typically high income earners. They can really supercharge, again, their retirement account savings, specifically at the voluntary after-tax side of things. Okay, let's take a look at some more items here. Thank you again for joining today's webinar. Please like this video, subscribe to our channel, as it helps get the word out to other solopreneurs like yourself. Okay, looks like we have another question here. We got a question here. Let me see here. from Samuel. Hello, can I do a transfer of my old employer 401k to my solo 401k via Fidelity, or do I have to send myself a check via Trust FBO name and deposit? Great question. So if you're a client of my solo 401k financial and we assisted you in opening up the brokerage accounts at Fidelity, known as company retirement non-prototype brokerage accounts, don't confuse, for those who are not aware of this, don't confuse Fidelity solo 401k, because they do offer their own solo 401k, but it doesn't have the bells and whistles, including being able to make voluntary after-tax contributions. But our plan does, and if you use Fidelity to hold the funds for the plan that we offer and you want to transfer a former employer plan to the solo 401k, that former employer plan is going to require that a check is mailed out. They won't typically send the transfer proceeds by wire. If they do, they will typically withhold 20% of federal taxes, where they only send 80%, and they're going to report it as a distribution, and you're going to have 60 days to then deposit those funds. So if you want to do it, if you want to process it as what's referred to in the industry as a trustee to trustee transfer, where you transfer the funds directly from a former employer 401k to the solo 401k plan, that institution, your former employer administrator, is going to most likely mail a check. Now that check needs to be made payable in the name of the solo 401k FBO, which stands for your benefit. So it would be, let's say the name of your solo 401k is Pine Trees Trust. So the check would be made payable in the name of Pine Trees, comma, Samuel Becker, trustee, because you're the trustee of the plan. It doesn't have to be written in those exact words. It can also be written as Samuel Becker, comma, trustee of Pine Trees Trust. The key is that you, when that transfer form is filled out, which we can help you fill out, that you check the appropriate box for a direct rollover, aka trusted to trustee transfer, and that you list on there how the check should be made payable. Some former employers will take phone instructions. We can call them with you, or you can call them and you would let them know that you are transferring it to a solo 401k, and that the check needs to be made payable as Pine Trees Trust, comma, Samuel Becker, trustee, and that the check is mailed to you as the trustee. You then deposit that check directly into the solo 401k brokerage account. You don't deposit that into your personal bank account, obviously. You would deposit that directly into the solo 401k brokerage account. Let me see if I can send over a link with more information on that for you. Give me a moment here. There we go. Let me send this link to you from our website that gives instructions on how to deposit that check. Okay, take a look at that. All right, let's see if we have any other questions today. Give me a moment here. Here's a great question here as well. Looks like someone performed the mega backdoor conversion recently through our plan, and they used Fidelity Investments to hold the funds. I called Fidelity and they moved the funds from the voluntary after-tax account to the Roth account. Fidelity did it immediately. But even though that happened all in one day, it accrued $2.70. Do I just move that over to my Roth also? Will I need to report that increase? Great question. So no, you don't need to move those funds. Those funds can just sit in that voluntary after-tax solo 401k bucket. And why is that? Well, because those funds trickled in after you process the conversion. So the rule is that you want to convert everything that's in that voluntary after-tax solo 401k bucket. But any interest that accrued after the fact, you can leave it in that voluntary after-tax solo 401k brokerage account. And it's actually a good idea to leave it in there, because many times Fidelity will close that brokerage account if it has a zero balance for a long period of time. So it's actually good that there's a few dollars left in there so that they keep that brokerage account open. So that way, when you go to perform another mega backdoor Roth solo 401k conversion, when you make another contribution at that time, you would convert everything again, but there's going to be more interest that's going to trickle in, which is great because that account will stay open. All right, let's see if we have any other questions here. So I think it's going to be a better idea, Brooke, if you send us an email about your question, because we might be speaking about separate things. So when I'm talking about the EIN number for the solo 401k, I'm referring for reporting mega backdoor Roth solo 401k conversions. So and again, we'll issue that Form 1099-R. That's all covered in our annual fee. But if you're having your CPA issue that 1099-R, and you processed that conversion last year, then yes, you would give him the EIN number for the solo 401k plan. If on the other hand, he needs the EIN number for other reasons because he's trying to claim a deduction for the annual fee that you paid to us or the setup fee for the plan, then in that case, you need to use the EIN number. You don't need to use any EIN number for that matter. Okay, so again, send us an email and we can take a look at your question more carefully because a lot of times it's hard to really gauge what's being asked on a live presentation. All right, let's see here. Looks like we don't have any other questions right now. We're almost done here with our webinar. Keep in mind, we'll be back again on the air today at 1 p.m. Pacific time. So you've got a couple slots today to join our daily webinar. Let's see if we got a couple more topics that we can cover here regarding today's topic, which again is surrounding the mega backdoor Roth solo 401k, how it's the retirement savings weapon for doctor, anesthesiologists, and lawyers. Let's see here. Why don't we just talk a little bit about some top mega backdoor Roth things to know. So let's see this slide here. So one thing to know is that, and we kind of touched this on already, how voluntary after-tax solo 401k contributions are not impacted by the 401k contributions that you make to your full-time employer plan. We also talked about how you can contribute 100% of your self-employment compensation up to the overall limit of $69,000 as an annual contribution, whichever is less for 2024. Now, here's one good item to know, that voluntary after-tax solo 401k contributions are not impacted by your Roth IRA contributions, including non-deductible IRA contributions. So you can still do the backdoor Roth IRA on top of the mega backdoor Roth strategy. Oh, let's see here. We got time for a couple more. Here we go on a few more top mega backdoor Roth solo 401k items to know. It's that it's not a taxable conversion, but it is reportable on a Form 1099-R. So when you make the voluntary after-tax solo 401k contribution, and then it gets converted to the Roth solo 401k or the Roth IRA, and it's not taxable because it's voluntary after-tax contributions, but you don't get a tax deduction, of course. And a Form 1099-R has to be issued even though it's not taxable. It is reportable. We talked about how you can still open a solo 401k plan here in 2025 and make voluntary after-tax contributions for 2024. So if we have one more here, and then I'm going to cover one last item after that, and then we'll be done. Where's that slide at? Just bear with me here. I think that's about it on that front, but I do want to talk about one last item that is on point here. So again, we're talking about the Mega Backdoor Roth Solo 401k, specifically for doctors and high income earners. So if you're a doctor, many times you may be participating in a 403b. And a 403b is a retirement plan, but it's specifically for educational workers, such as teachers, professors, as well as those in the medical field, whether you're a nurse or a doctor. So there's a 403b exception whereby it's not a good exception, unfortunately. We've been talking about how you can really supercharge your retirement account savings by contributing to both your daytime employer 401k and then doing the Mega Backdoor Roth Solo 401k plan. Well, that strategy doesn't work very well if you are also making contributions to a 403b plan. And let me share a page from our website that talks about that to help me explain it to you more easily. Let's see here. I think if I can get to that, present. Bear with me here, share. Okay, so back to our website here. Let's do a search here for 403b. All right. Here's a good one here. Impact of 403b daytime job contributions to solo 401k contributions, including voluntary after-tax solo 401k contributions. So this is one of those quirky rules that only applies to 403bs, but not 401k plans. So if you also participate in a 403b through your daytime employer, and you max out contributions to that 403b plan, or you make any type of contribution to that 403b plan, that's going to negatively impact the amount that you can contribute to your solo 401k plan. So let's say, for example, that you're still trying to make a contribution for tax year 2024 to your solo 401k. Let's further assume that you have a 403b through your daytime employer and that you made a contribution to that daytime employer 403b. Let's say you contributed $23,000 as an employee contribution for tax year 2024 to that 403b. Well, that $23,000 contribution is going to impact how much you can contribute to your solo 401k. So the overall contribution limit to a solo 401k plan for tax year 2024 is $69,000. So you're not going to be able to make that full $69,000 Mega Backdoor Roth Solo 401k contribution because you have to subtract that $23,000 contribution that you make to your daytime employer 403b. So whatever the math is, the difference between $69,000 and $23,000, let's see here. So $69,000 minus $23,000 is $46,000. You're only going to be able to do a voluntary after-tax solo 401k contribution of $46,000, even if you have enough self-employment income to do the entire $69,000 as a voluntary after-tax contribution. And that's because of the 403b regulations. It's not a solo 401k rule or a traditional 401k rule, but rather a 403b rule, what I like to call restriction. So again, this rule doesn't apply to 401k. So if you have a daytime employer 401k and you max out contributions to that daytime employer 401k, you're still going to be able to max out your solo 401k voluntary after-tax solo 401k contributions of $69,000 and then immediately convert it to the Roth Solo 401k, but that doesn't work with the 403b. Okay, that was the last topic I wanted to cover there because we do get that question quite a bit. See if we have any other last question here. Okay, here we go. Looks like we have a follow-up question here from Samuel. My old employer 401k rollover process does not allow me to edit the FBO Samuel Becker portion of the check, but I'm requesting from them. But to my solo 401k instructions state the check amount must be made out, including my middle name. Do you see this being a problem? No, we do not. I guess I touched on it a little bit earlier. It doesn't have to be exactly the way it's stated there. So you can have them make it payable as follows. I gave this example earlier. Let's say the name of your plan is Pine Trees Trust. You would list Pine Trees Trust, comma, your name. That's it. And if you want to add to that, you can, after you put comma after your name, you could put trustee. So Pine Tree Trust, comma, Samuel Becker, trustee. Comma, trustee. Another example, if you have enough room, it would be Pine Trees Trust, FBO Samuel Becker. You don't have to put your full legal name. It can be your first and last name. Another example, if you're running out of character spaces, you can type in there, again, let's say the name of your plan is Pine Trees Trust. You can type in there pine trees, and then you can abbreviate the word trust by putting TR, and then you can put comma, Samuel Becker, comma, trustee. So what ultimately matters is that the plan name is included in that check and that the transfer form is properly filled out and requested. All right, that's a good last question. Again, thank you for joining today's daily webinar. Please like our videos. It helps to get the knowledge out to other solopreneurs like yourself. And until next time, have a good rest of the day.